Welcome back to Bull Market Bully, where we break down stocks. Today we're diving into GameStop, ticker symbol GME. Does this meme stock still have the juice? Like, comment, and subscribe to stay in the loop. GameStop Corporation, once the go-to spot for physical video games, has been on a wild ride. From its glory days to the meme stock frenzy, GameStop is now transitioning in a changing gaming market, with a growing focus on digital and e-commerce platforms. But can GameStop stay relevant? Let's talk numbers. GameStop reported a net income of $17.4 million in Q3 2024, despite a 20% revenue decline to $860.3 million. This profit came from aggressive cost-cutting measures, including store closures and focusing on higher-margin products. The company's cash reserves sit at $4.2 billion, providing a solid financial cushion. However, a price-to-earnings ratio of 143.75 signals overvaluation. The profit margin stands at 0.93%, a step in the right direction. The gaming industry is evolving fast, and GameStop's competition is fierce. Best Buy offers a diversified electronics catalog, Amazon dominates e-commerce with unbeatable convenience, and digital platforms like Steam and Epic Games Store make downloading games effortless. GameStop's reliance on physical game sales is declining as gamers move to digital downloads. Its e-commerce is still in its early stages and lacks the scale of its competitors. Despite these challenges, GameStop's brand recognition and loyal customer base give it a unique edge in the collectibles market. Future prospects, store expansion, online presence, and challenges. GameStop's strategy hinges on modernizing its business model. The company is shifting toward e-commerce, integrating physical stores into a hybrid retail experience. This includes in-store events, tournaments, and exclusive collectibles. Challenges abound. The digital gaming market grows, leaving little room for physical retail. Analysts are skeptical about GameStop's long-term profitability. Execution is key. Leveraging cash reserves for a unique value proposition offers hope. Otherwise, it risks becoming a relic of the past. Investment strategies. Should you invest? GameStop is speculative. Keep your position small and expect volatility. Monitor it closely. Watch for e-commerce growth. Improving metrics could boost the stock. Fundamentals must match the hype. Here's our final grade for GameStop. It earns a C+. Showing signs of life, but risks are significant. Cash reserves and loyal fan base are positives, but digital transformation is crucial. This stock is for those who can handle volatility. And now it's time for a bonus tip, the hidden opportunity in GameStop's collectibles market. GameStop's collectibles segment could be a game changer. With growing interest in limited edition merchandise, this segment offers high margins. If GameStop invests wisely, it could carve out a profitable niche. That's it for today's breakdown. Like, comment, and subscribe to Bull Market Bully for more insights. See you in the next video.